Hi, welcome back to Accounting with Vernon for my next presentation on company accounts. So today we are going to look at, as I finished my last presentation about the capital structure of a company, and today we'll be looking at the issue of shares, right? How is it done? What's the process of it? So if you have not yet subscribed my channel, please don't forget to subscribe it, and then uh, gives me some motivation to do more contents for you regarding unit 2 for the Edexcel, and also for any other students who are at their initial stage of learning what unit of what is corporate and management accounting, right? So what is a public what is an initial public offer? An initial public offer is a situation where a company decides to issue its shares to the general public. Okay, the message has to go to general public that this company ABC Limited, is going to issue, let's assume that for our explanation, 500,000 ordinary shares at pound 1 each. Okay, so how do they convey this message? So the first stage could be that the company has to prepare a prospectus. Okay, so what is included in the prospectus? A prospectus gives the shareholders or gives investors knowledge about the company. Okay, it gives you the basic the company information, what they are going to do, what sort of a business, right? What could be the share price? Okay, they have to inform the share price, how many shares they are going to issue, and what will be the payment schedule, and what will be the application deadline, right? So this information has to be there in the prospectus. And then any external shareholder, any external investors, they get information about the company, about what type of a business, how many shares they are going to issue, what is going to be the price of a share, and also what will be the payment schedules, and what could be the application deadline. Clear? So the company first has to prepare a prospectus and give the information to potential investors. Clear? Second stage. Now you have seen the information, you have got some idea, and then comes the application stage. Okay. Now you have to start uh, making some decisions, and you go through the application stage. Okay. So what will happen? Potential shareholders will complete the application forms. Okay, so potential shareholders will complete the application forms. Once they have completed the application forms, they'll submit the application forms with relevant payment. Could be a full payment or could be partial payments, which I'll explain in a short while. Okay, number one, stage one, you have prepared the prospectus and you have given information to the potential investors about the company. So and so the information I mentioned. Number two, the application stage, where the shareholders or the investors will fill the application forms, and they'll submit the applications with partial payments or fully payments, depending on how the company is going to collect the money. Is it clear? Right. It's very important now. Okay, it's very important now. I'll come to the payment schedule in a while. After the company have received the applications, what will they do? Then starts the allotment. Okay, the company will go through the applications. They will see, okay, which application should be allotted shares, or which application should be given shares, or how many shares we are going. It's going to be pro rata, or are we going to get full shares, or are we going to are we going to reject some applications? Of course, in the exam questions, you find both these situations. Okay, and that's a stage 3, where they will decide which applications are going to get shares, how many shares, and which applications are going to be rejected and refunded. Okay, so that's called allotment stage. So if I take the stage 1 was the preparation of the prospectus, second one was the application stage, and the third stage was your allotment stage. Okay, the third stage was the allotment stage. The last stage will be your call stage. So that is the last, the last amount of money that the shareholders have to pay to the company. You remember what I told you on my last presentation, called up capital. If they have called up 0.8 out of £1, and then 0.2 was uncalled capital, so the call amount will be called at the stage when the company decides it's time to get the call money. So is it clear? So the initial public offering then has come with four clearly identified and clearly laid down processes where investors will take their time to grow through the process and then invest their money in the company. Okay, right. Now, how does this payments work in this stage? How does the payments work? I did mention you last week a little bit. Any share comes with an issue price. Any share comes with an issue price. Let's imagine for our knowledge, it's pound one ordinary shares we are going to issue. Okay, this £1 will be mentioned in that prospectus how they are going to collect the money. How they are going to collect the money. They will mention on application stage how much, on allotment stage how much, and on call stage how much. So let's assume that they have decided that 0.50 is on application, 0.30 is on allotment, and 0.20 is on call. This is how the £1 is made up of. Okay, that's how the £1 is made up of. So all this information, company information, how many shares they are issuing, what's the price of a share, how are they going to collect the money, what's the application deadline, everything is mentioned in the prospectus. Okay, then you apply for the shares, application stage. Once you apply, you fill the application forms. You pay the money completely. You can pay this £1 at once, or you can pay the money how the company has asked to pay on application 0.5, allotment 0.3. Based on different stages, you'll be able to pay the money. Okay, that's the application stage. Okay, and then comes the allotment stage. So the company receives the applications. They decide which shares they need to be allotted shares. Okay, if they are going to allot shares, how many shares they are going to allot, and if they are not going to allot, the refund process. Okay, that's the third stage, the allotment stage. Fourth stage was what? The call stage. Of course, that's nothing much. The call stage where they decide to call the remaining amount due on the shares. Is it clear? So that's basically a very quick understanding of the initial public offering, because you're not going to get a question for the Edexcel exam about initial public offering, explain the initial public offering, but you'll have to have the knowledge about how this thing is done. Okay, so the next lesson that we are going to look at, which is going to come up soon after this, is going to be the public issue of shares, the accounting entries, and the journal entries, right? So we are now going to that the stage where we are going to learn the double entry, and we are going to post transactions in our books. Okay, so once again, accounting with Vernon for unit 2 Edexcel Pearson specification. We are in our lesson 1. Please subscribe the channel and share it with others who are keen on learning accounting. And I will meet you soon on my next content. Thank you very much.